Hello! Today I'm going to show you how you can earn $4,000 a year in dividend income. Let me briefly introduce myself. My name is Yamtar, and I've been investing for about 14 years. Over this time, I've achieved my financial freedom. And since I no longer work actively, I wanted to find a meaningful way to spend my time. That's why I decided to share the strategies and investments I've built over the past 14 years, along with some of my life experiences. From now on, I'll be sharing my knowledge full-time here on YouTube. Now, let's get into the video. Building a portfolio that pays you $4,000 every single month in passive dividend income may sound like an impossible dream for many people, but in reality, it is a mathematical goal. It can be reached through consistency, discipline, and one of the most powerful forces in finance, the power of compound interest. In this video, we are going to explore exactly how long it takes to reach that goal if you invest $1,000 every month. No shortcuts, no overnight success, and no unrealistic promises. Just mathematics, long-term compounding, and real-world market returns. By the end of this video, you will understand not only how long this journey takes, but also why it takes this amount of time, how compound interest actually works, and what you can do to accelerate your progress toward financial independence. Let's start with a big picture. Earning $4,000 a month in passive income means generating $48,000 per year. Dividends are paid annually, even if companies distribute them quarterly or monthly. So, we need to focus on the annual amount, $48,000. Now, the question becomes, how much capital do you need to consistently generate $48,000 every year without taking on unnecessary risk? The answer depends on what kind of dividend yield your portfolio produces. A dividend yield is simply the percentage of your investment that a company or fund pays you each year. For example, if you invest $100,000 in a fund that pays 4% annually in dividends, you would earn $4,000 a year. Simple math. But we're not talking about $100,000 here. We're talking about building a portfolio that pays $48,000 per year. Most investors who want stable, long-term dividend income rely on a 4% yield. This isn't random. It comes from decades of market data, safe withdrawal rate studies, and the performance of broad market index funds and dividend-focused ETFs like SCHD, VIG, VYM, and others. A 4% annual yield is considered sustainable and relatively safe. So if we take $48,000 and divide it by 0.04, we get $1,200,000. That means you need a $1.2 million portfolio to safely generate $4,000 per month in dividends. This is the benchmark most long-term investors follow. But of course, some investors pursue higher yields. 6% yield will require about $800,000. 8% yield will require about $600,000. Some high-yield funds even go above 10%, but these usually come with significantly higher risk, unstable payouts, or declining share prices. In this video, we're focused on the realistic, sustainable, long-term goal, $1.2 million. So the question becomes, how long does it take to reach $1.2 million if you invest $1,000 every single month? To answer that, we need to consider real-world annual returns. Historically, the stock market, specifically the S&P 500, has returned an average of 7 to 10% annually over long periods. Not every year, but averaged over decades. So we will analyze 3 realistic scenarios: 6% returns, 8% returns, and 10% returns. These will cover conservative, average, and aggressive long-term performance. Let's begin with the first scenario, 6% annual returns. This is a conservative estimate, one that reflects a portfolio that is balanced, stable, and not overly aggressive. Investing $1,000 every month at 6% interest will grow your portfolio steadily, but not explosively. Under these conditions, reaching $1.2 million takes approximately 28 to 30 years. Yes, you heard that right. Nearly 3 decades. This is the part that surprises most people. They expect that investing $1,000 a month will make them a millionaire in 10 or 15 years. But the truth is that compounding requires time, lots of time, especially when starting from zero. Your portfolio grows slowly at first because your contributions are doing most of the work early on. But over time, the interest begins to snowball, and the final years contribute the biggest amounts. Now let's examine the more realistic long-term average. 8% annual returns. This is close to the historical average of the S&P 500 index. At 8% returns, how long does it take? The answer? Roughly 22 to 24 years. Still a long time, but significantly faster than at 6%. Just a 2% increase in your return cuts, about 6 to 8 years off your timeline. That's the power of compounding. Small differences early on become massive differences later. And now we move to the aggressive scenario, 10% annual returns. This is possible with a more growth-focused portfolio that includes stronger exposure to sectors like technology, innovation, and high-growth companies. It's not guaranteed, and it comes with higher volatility, but historically, it's not unrealistic. Under this scenario, your journey to $1.2 million would take approximately 18 to 20 years. This is the fastest realistic timeline if you're investing $1,000 every month. Even with high returns, it takes nearly 2 decades to build a dividend-paying millionaire portfolio from scratch. At this point, you might be wondering, why does it take this long? The reason is simple. The first $100,000 is the hardest. Charlie Munger famously said, the first 100,000 is a B times T. And he was absolutely right. When you start investing, your portfolio relies primarily on your monthly contributions. You invest $1,000, then another $1,000 the next month, and another the following month. But your investment returns at this stage are tiny. You may earn a few dollars or a few tens of dollars per month in growth. It feels slow, almost meaningless. Many people give up during this period because the progress feels too small. But this is the most important time to stay consistent. Once you hit $100,000, something magical happens. Your investments begin to grow faster. At 6% annual returns, $100,000 generates $6,000 per year, about $500 per month, without you doing anything. Now imagine continuing to add $1,000 each month on top of that. The snowball starts to form. When you reach $200,000, your annual growth becomes even larger. At 8% annual returns, $200,000 grows by $16,000 per year. That's more than your yearly contributions. That's the moment you realize compound interest is doing more work than you are. By the time you reach $500,000, your investments alone may be generating $30,000 to $40,000 per year. And once you cross the $1 million mark, your money grows faster in 1 year than you contributed in the last decade. This is the exponential nature of compounding. The first half of your journey feels painfully slow. The second half feels unbelievably fast. So now the next logical question is, can you speed this up? Absolutely. The timeline we mentioned is not fixed. There are several ways to accelerate your journey to $4,000 in monthly passive income. First, increase your monthly investment. Even a small increase from $1,000 to $1,200 per month can shave years off your timeline. Second, reinvest all dividends. This is non-negotiable. Reinvested dividends turbocharge your compounding. Third, focus on dividend growth companies, those that increase their dividends every year. These companies not only pay you more over time, but also grow in share price, boosting your total returns. Fourth, avoid high fee funds. Fees erode your long-term returns significantly. A 1% fee may not sound like much, but over 20 or 30 years, it can cost you hundreds of thousands of dollars. Finally, if you live in a country like the United States, use tax-advantaged accounts such as the Roth IRA, 401k, or HSA. These accounts allow your investments to grow tax-free or tax-deferred, dramatically improving your long-term compounding. The journey to $4,000 in monthly passive income is long, yes, but it is achievable. And the beauty of this journey is that every year you get a little closer. Every month you build more wealth, and every dollar you reinvest accelerates your progress. Wealth is not built overnight. It is built through thousands of small, consistent steps. $1,000 at a time, 1 month at a time, 1 year at a time. Compounding does the rest. If you stay committed, stay invested, and stay patient, the day will come when your money works harder than you do. And that is the true power of investing. Financial freedom through the unstoppable force of compound interest. All right. So what habits can you give up to increase your monthly investment amount? And how much faster can you complete this passive income goal? Or where can you earn extra income to reach the financial freedom you're aiming for? We're going to calculate all of that step by step. If there's anything else you want to learn on the road to financial freedom, let me know in the comments. I'll respond to every comment with real dedication. Don't forget to subscribe and like the video.